Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing our week 11 changes for 2021. We're going to go ahead and do our stock market weekly recap. We're going to go ahead and cover the dates from the 15th to the 19th of March 2021. We're going to quickly go over last week's, which are up on the screen now. Then we're going to go ahead and cover the four main indexes, take a look at the entire S&P 500 performance for this past week, what stocks were up, what stocks were down, also take a look at which sectors were strong or which sectors were weak. Then we'll go ahead and cover the oil, dollar, silver, gold, bonds, the 10-year yield, and current mortgage rates to kind of keep track of where the market is going. Right now, it was a bit of a cool-off week. We just hit some all-time highs here recently. So I believe we are due to cool off. I'm really hoping that the market does cool off just a little bit, retract, find itself a little bit of a bottoming out point where it can continue kind of moving higher. That's what I'd like to see. Simmers a little bit, has a reason to move higher versus just continuing to move higher without a reason. Okay, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. So up on the screen now, we have last week's changes, which are pretty green. We had a pretty positive week last week. For the 8th through the 12th of March, the S&P 500 was up a whopping 2.64%. The Dow Jones was in second, up 4.07. The Nasdaq did rebound after having several negative weeks, up 3.09. And the Russell 2000 was up a whopping 7.32%. So I know we've been looking at small mid-cap companies. So I know that I recently went out there and started buying up a few different smaller mid-cap companies, which will cover a little bit of the buys that I made this week. And Bitcoin had a jump from 49,000, nearly 50,000 to over $60,000 last week. I'm not sure what it did this week, but I know it had jumped up pretty nice last week. And I saw a lot of investors, selling off just little bits of it. I've considered selling off mine back at 54,000, but I just never did. And now here it is, clearing up to nearly 61,000 here. Silver and gold were also positive, 1.5 to nearly 3% there for silver. Bonds were down about a half a point at 0.53%. 10-year yields went up nearly 11 basis points, or 9 basis points from 1.55 to 1.64, and mortgage rates remain continuing to move higher from 3.16 to 3.23. On Tuesday, I think it was Tuesday, the Fed came out, talked. Jerome Powell was pretty relaxed. He was talking about how inflation isn't the enemy. They're going to continue to try and keep that 10-year bond rate low, continue to keep mortgage rates pretty low. So they're going to be, with the stimulus as well that recently came out. I know if you didn't get your stimulus last Friday, you got it sometime probably this week here. So, there's a lot of movement out there and discussions where inflation may have played a big part, but they say that inflation is under control. They're not scared of it, and the markets didn't react negatively, as negative as investors had thought going into the Fed discussion. So let's go ahead and jump over into talking about the main indexes. So S&P 500 this past week, it did hit an all-time high here back on, I think it was last week. I don't think it was this week that we hit an all-time high. I believe it was last week. It hit an all-time high of 39.84. This week, it just kind of pulled back just slightly, down 0.77%, which I do not think that this is, bad at all. I really would like a bit of a pullback. Year to date, it is still up 4.18%. The Dow Jones, I believe this is in second place currently. It is down 0.46% over the past week, but year to date, it is up 6.6%, putting it in second place. The worst performer at the moment is the Nasdaq, down 0.79 for the week. Year to date, it is up 2.54%. This is actually the worst performer of the four main indexes. And then we have our first place winner. They did take a bit of a hit this past week, down 2.77%, but year to date, it is up nearly 16% there at 15.83%. The S&P 500, let's go ahead and take a look at the 1 week performance here. We can kind of see that, not any one sector was very strong. So looking at it just by sector, every sector out there is a little mixed. There's some positive, there's some negative. Not any one sector looks like it was pretty, hit pretty hard besides financials, credit services. That looks like it got hit pretty hard. But if we look over at the banks, Bank of America is positive on the week. That looks like it's the only bank that's positive there. Also oil. Oil had been popping this past few weeks with oil prices rising. Here in Oregon, I think where I'm at in Medford, Oregon, it rose above $3, and I think I saw an article get floated out that Medford, Oregon has the highest gas prices in the state right now. It's over $3 a gallon, which is pretty expensive from where I thought it was like $2.50 and some change, somewhere in that area. Not too long ago, maybe a month or two ago, it was down in the $2.50 range, so it's definitely been popping up. And Exxon here and Chevron both going down anywhere from nearly 7% there to almost 9% there within oil. So I would say that credit services got hit and energy within the oil and gas area got hit. Now every other sector out there looks pretty mixed, where we see some tech high, some tech low, with Broadcom positive over 5%, Facebook positive over 8%, but Amazon down 0.47. Not bad there for Amazon and Apple. Microsoft down 2.29, Google down 1.12. Tesla kind of getting hammered still at down 5.6%. I saw a lot of investors asking the questions if Tesla will ever hit $800 again. And I think, Tesla was overblown here in the short term. I think it still has room to fall. I'm not sure where exactly it'll fall, but I do believe that its current valuation isn't where it should be for its current time frame. I think it's a little overblown for where it's trading at versus its valuation wise. And so yeah, those are the single stocks out there and the sector recap there. Now jumping over into oil. Oil this past week, as we saw Chevron and Exxon down this past week. Here we have the United States Oil Fund, ticker symbol USO, down 5.79%. Year to date, it is still positive by 26.57%. Then we have the dollar. So taking a look at the dollar here, the Fed and the package, the $1 trillion package for the stimulus package was signed not this week but last week, and all that money started going out. I thought that would have actually hammered the dollar's worth here, but it actually, I believe it looks like it crept up. It started at 91.69 for the week a week ago, and it's up now at 91.74. So it remained pretty much intact. A bit of a dip there. It looks like intraday on Wednesday, but after Wednesday kind of rolled through, this may have been the Fed right here. Maybe the Fed discussion was on Wednesday. Let me know down in the comment section below if Jerome Powell was talking on Wednesday, or I thought it was Tuesday, but it may have been Wednesday there. I know I had my days confused this past week. Silver positive by 1.12%, putting it still negative year to date, but could be another week here and we could see it move into the positive. Gold, quite a bit to go until it moves up into the positive. It is up for the week, up 1.11%, and bonds continuing to fall. Last week they were down 0.5%. This week they're down 0.25%, down 0.25%. Year to date they are down 4.25%. I wouldn't recommend bonds at this time in the market with so much money being out there. The worth, dollar is, I feel like the dollar should go lower. Like I believe that the dollar will go below $90 at some point, and being in the bond market, invested in bonds at this time versus an index or something that appreciates, I would not just be in bonds at the moment. And we have the 10-year yield actually moving higher. So it was at 1.64. It is now up at 1.73. So it went up 9 basis points. That is crazy to see the 10-year yield popping up. It is now over 8%. I think it was down at 0.5 and some change. Not even a year ago for the 10-year yield. It is now up 1.73%. I don't know, if it'll continue moving higher. I'm not sure if, the high yield savings accounts, if that plays a part. I know when the 10-year yield was going down, bank accounts were cutting their high yield savings down really quick. We were at what, 2.7% going into 2020. We had Wealthfront offering 2.72, Ally, Marcus offering around 2.5, and then all of a sudden everything got hit. And right now, high yield savings accounts are offering roughly at 0.5% over at Ally and Marcus. And I know Marcus, if you sign up through a referral, you get an additional 0.2% up to 5 times. So you can actually have up to a 1.5% APY. It only lasts 3 months per referral time, but it's better than nothing. And then we have our current mortgage rates rose 11 basis points. That is quite the rise there. I'm really happy that I locked in at a 2.75. We walked through our property this past week. It looks amazing and really happy. We're going to be doing our final inspection, I believe, a week and a half from today. So we won't close this week, but I believe we'll close the weekend after, like 2 weeks away. Everything is in. They're just doing some finishing touches. We had an inspection, early on inspection go through and take a look at the property, and we're really happy with the progression of the home. And I'll be releasing a video here shortly, going around our 3-bedroom, 2-bath home and into our new home with the kiddos having their own bedrooms. I'm really excited about that. One of the main things is just being able to have the kids roam around, have their own rooms. I think that's really special for them. And then we have some trades. So I did post a video on a screenshot on Monday that I had 8 buys and 1 sell. I believe I sold out of Walgreens this week. I sold out of Waco, and I may have sold some other companies as well. I did record a video. It's on my desktop. I recorded a video. I just did not release it. Also with Merrill Edge, I've been talking about, I'm just such a big talker, right? With talking about moving over to Fidelity, talking about getting out of M1 Finance, consolidating my accounts. But right now, I'm sticking with what I have at the moment just because I have been going through and doing my business taxes. I've been doing my personal taxes. I've been trying to sell off my current home. I've been going through the process of buying my new home. So I'm really flooded with what I've been trying to get done after hours, after I'm done working, along with, family time and all the other times. So I've just been my work, my time has been limited here. Even on YouTube, as you can tell, I haven't been able to upload as often as I'd like. I used to be able to upload every Monday, Wednesday, Friday, and a Saturday video, and that really has been getting cut down here recently. But hopefully, once we're past April, where we're finally moved in, tax season is behind us, and I'm all caught up as far as my other work, we can definitely kind of push. So I did buy Kratos Defense. This is a defense and security. It's really interesting, the background behind this one. They are growing. It's a small cap company. It's worth about $3 billion. And they don't have too many other competitors within the niche that I feel. One of the main reasons that I started going for this one, I only have a little over $700 invested in this one. And this is a straight growth play where I'm thinking I'm just going to go ahead and buy it. It's over on Webull. So I bought it on Webull. I bought 27 shares. I'm just going to let it ride. I'm not even going to bother looking at it that often. But I thought it was an interesting one. We also bought AbbVie on the dip. I sold out of it at $108 on Friday of last week on the 12th. On the 17th, they didn't have a patent. It was something about a patent. Here it is. Okay, so the U.S. Food and Drug Administration has extended the review period for expanded use on AbbVie's arthritis drug for the past 3 months. So they were going through getting verified by the U.S. Food and Drug Administration, but because they didn't get approved, instead it got extended. That hurt their stock quite a bit, dropping them down 6.66% from about a high of 110. I know it broke 110 for a very short bit on Monday, and then it fell down to the $104 on the 17th there. So I bought quite a bit of it. I bought 31 shares of it, which will be about $161 in dividends for the year. I'll probably ride this up again to 110. I think it was just a short-term blip, and then they'll recover really quickly. M1 Finance. So M1 Finance, they do offer custodial accounts now. So if you're looking at opening an account for a minor under the age of 18, then M1 Finance allows you to open a taxable brokerage for minors where they will have ownership of this account and they can be transferred over to them when they reach the age of maturity, which is 18 plus. So I thought that was really fun and cool. I will probably take advantage of that in the future. I know my son recently opened an account over at our credit union where I work at, and he's been doing some deposits on there. And I think that is pretty much it. Kind of taking a look at airline stocks. I was looking at airline stocks. So this is a screenshot from back on February 24th, 2020. I don't think it was the interview with Warren Buffett I was watching. It may have been the interview with Warren Buffett at the time. So yeah, I think it was an interview with Warren Buffett. And I was watching that of where he thought the companies in the future we were going. And here we have American Airlines at 26.41, United Airlines 75, yada yada. And we can see that the difference here is still negative. 1 year away from, this is on February 24th. So I think the 29th of February may have been the last back in the past in 2020 before the whole crash where the market fell down 20-30%. Here we see that these charts really haven't recovered from that time frame here in February. They just kind of fell off a cliff, and they've been slowly climbing where a few of them have recovered. I think it was Southwest Airlines has recovered, but the other ones have not. And that is it for this video. Quite a bit long video, but hopefully it was entertaining and fun for the week. So that is going to be it. If you guys are brand new to the channel, have not yet subscribed, go down below. Hit the red button to subscribe, make it great. Hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue. And I will see you guys in the next video. Bye-bye.